Michael Burry's takedown of the depreciation thing, it kind of gives a feeling that like Nvidia cares about the fact that their share price is falling and they're trying to fight back against it. What do you make of this sort of PR push they're doing?
Yes, I view it a little differently. Look, I mean, at the end of the day, like there's one godfather of AI, and that's Jensen. I think Jensen, right now, it's the recognition that they're transparent. In other words, like NVIDIA is not trying to hide anything. They're ultimately saying like, hey, we are out there front and center, and it just comes down to demand and supply is 12-to-1 for their chips. I mean, I saw that being in Asia for the last 3 weeks. So them congratulating Google, AMD, and others that are going to be successful, it continues to be NVIDIA's world, and everyone else is paying rent. But the reality is that they are not going to sit there and hide behind some PR when it comes to, whether it's Burry or anyone else calling it a bubble. I mean, Jensen's going to be out there front and center because, in my opinion, it continues to only be 10:30 p.m. in that AI party that goes to 4 a.m.
But this makes me think a lot of Intel. Back in the day when we were all rushing out to get the 386 and then the 486 and maybe the Pentium, right? But then Apple was like, why are we giving them these margins? Let's make our own chips. And so did everyone else. And now Intel obviously needs a sort of government bailout in the form of a stake purchase. Why isn't NVIDIA vulnerable to the same kind of vertical integration at these, if Meta, if Google, if Amazon all make their own chips, as they are doing?
It's a great point, and I get the comparison. They're 4 years ahead, in my opinion, of really anyone else in the world, including Huawei, right? So it comes down to like, now will there be a gap narrowed? Big tech's going to continue. They're going to go and make their chip. You'll see that they'll vertically have that ecosystem, and that's a great thing, because the reality right now is like 12-to-1 demand and supply. In other words, NVIDIA doesn't have enough chips to ultimately meet demand, right, relative to what we see. But it speaks to my point. It's about the second, third, fourth derivatives of AI playing out. You have $3 to $4 trillion that's going to be spent in the next few years. To call this a bubble, it's wrong. It's someone like myself that covered tech stocks in the late 90s. It's a 1996 moment, not a 1999 tech bubble moment. That continues to be our view.
How does that $3 to $4 trillion of spending get funded? Famously, Sam Altman was asked on stage a couple of weeks ago how he's going to fund his $1.4 trillion in CapEx plans with only $13 billion in revenue, and he just got so angry that he declined to answer the question, right? I see that, ChatGPT has, right now, I think, they have a $20 charge, right, for the account that I pay double because I have a work and a personal account, but they're not making massive amounts of revenue. 35 million people are signed on, and it could turn out to be like the Friendster or even maybe the MySpace of AI. Where does this revenue come from?
Yeah, well, see, look, today, it's still enterprise. When we think about the enterprise, only 3% of companies have gone down the AI path. So when you look and that's just in the US. Globally, that's just actually starting with sovereigns, what we're seeing in Asia. So when I look at OpenAI, I view it as, it's not just going to be at ChatGPT. It's about what that's going to be on the enterprise, consumer. The consumer applications haven't even started relative to
But it has to come quick, right? I mean, remember when the dot-com bubble burst, it took years and years to make up the revenue that we needed to pay for the fiber outlay in the beginning.
Yeah, and I think for OpenAI, for every dollar that they're spending in terms of the stakes that they're taking, they're, just like NVIDIA, they'll get $12, $15, $20 back in terms of revenue.
If we're, though, talking about who wins the enterprise race, I mean, wouldn't that be Google, though? They already have relationships with 40,000 companies. And then when it comes to consumers, they know that name so much better. I mean, increasingly, obviously, they know about OpenAI and Sam Altman and ChatGPT. But especially with that enterprise relationship, who's to say that OpenAI wins out on that horse race?
Look, I think there's going to be many winners, right? I mean, from NVIDIA on the chip side, when you talk about Microsoft, where they stand on the hyperscale, Oracle, and I think that stock's been way oversold here. But look, the reality is, you go back earlier this year, the New York City cab driver was bearish on Google. Now look at it, because it's my view, it's not just on enterprise with GCP, with Google Cloud, with what's happening on chips along with Broadcom, but also, you look out, they're going to ultimately have that Apple deal. I mean, Apple is going to have to bet on Gemini as their AI partnership, which is another benefit here. So I think it just speaks to our view is that, it's not just about NVIDIA. And I believe Nvidia ultimately is a stock that goes much higher here, 225, 250. But it's about the second, third, fourth derivatives playing out across, I think the world. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
So Nvidia at the lowest in the month, is this just like the most incredible buying opportunity that we're going to see for this company?
Every time this sells off, you own it, because it's my view, it's $5 trillion and ultimately it's $6 trillion. Because look, there's only one godfather, right? And that's Jensen. And there's one chip in the world fueling the AI revolution. And that continues to be Nvidia. There will be other, like anytime if there's a DeepSeek moment, you'll have Google TPU. There's going to be other things that happen, but nothing is going to get what I view as really this Rocky Balboa of the AI revolution, which is, Jensen and Nvidia.
You must have the most fun Thanksgiving Day conversation around the dinner table. I'm trying to get invited over to the Ives household. That sounds like a good time.
Look, and again, the goal is a lot of food, a lot of sports, and maybe some AI talk here and there.
What more could you want?
Who's Penn State playing this weekend?
And we play Rutgers, and then we'll have our new coach by early next week, and then we start the upward climb, which I'm very optimistic.
Use in the competition that's heating up with Nvidia, it is competitive in terms of hardware, not software. Nvidia is more than just GPUs, and they've created a moat with the software aspect. So we're talking about CUDA and other aspects that Nvidia offers. So we have these GPUs. Yes, that's the hardware. GPUs are more generally started as a graphics card. Now they've been utilized as AI, whereas TPUs are a little more focused on AI, hence why the enhancement. But if that makes me really go back to what happened with DeepSeek when we had a sell-off on Nvidia, when in all reality, there's a huge TAM for all of artificial intelligence and a lot of room for everyone at the table. But from a competition perspective, we cannot forget the software and the moat that is happening around Nvidia. And the pipeline is still very large, especially with Blackwell, and there's still a lot of spending that's happening. So I don't think that this is a direct competition more broadly. It's just in one component of Nvidia because of the software. You need it to train the models. Replacing your entire stack is just such a big lift. I don't see how that would shift all the way to Google. Google's TPUs are going to be more of an enhancement, whereas you still need to rely a lot on Nvidia because of the moat that they've created, because of the software capabilities.
All right, Rick, and as we look at NVIDIA, and as we've talked about NVIDIA on a near daily basis in terms of the technicals we're seeing, the last month has been a bit of a rough go for NVIDIA, a lot of choppiness. They're down more than 7%, but year to date, still up close to 30%. When you look at the technicals of how it's been affected by some of this AI bubble talk and these recent headlines, what are they showing us?
So like our last chart, we had more of a rising wedge type pattern here, but the main difference is that this one is much less steep here. This was a much more gradual ascension here rather than Alphabet's a very sharp rally. So in this case, what we had was a sideways range you could identify here between about 165 and 185. Then after some fluctuations, we had our highs here near 212. And another thing, too, that you could consider is it looks like a head and shoulders type setup was developing here. You can see our shoulders and our head, and this was our neckline, which is the breakdown point there near 177. So we bounced off that area several times, including yesterday.
Welcome to my channel. Hope you're all doing well today. There's a lot happening around Nvidia, so let's break it down clearly. First, a report came out from the information claiming that Chinese regulators have blocked ByteDance from using Nvidia chips in any new data centers. Now, I always take Nvidia-related stories from that outlet with caution because they don't have the strongest accuracy record when it comes to Nvidia rumors. But since the news is circulating, I'm sharing it so you're aware of it. Even if the headline turns out to be true, it honestly doesn't change much for Nvidia. The company is already restricted from selling its advanced hardware to China. Nvidia has removed all China-related revenue from its future outlook, and despite having zero contribution from that region, the business continues to accelerate at a massive pace. Now I want to revisit the whole Nvidia GPU versus Google TPU discussion, because that seems to be on the minds of a lot of investors right now. Personally, I don't see the success of Google's TPUs or Gemini 3 as any real threat to Nvidia anytime soon. I'm not bearish on Google at all. This market is so huge that multiple companies can grow together. Let's think about this logically. Is the world still extremely compute dependent? Absolutely. Will Nvidia sell everything it produces in 2026? Very likely yes. What about 2027? Again, most likely yes. Companies like Meta simply can't get enough compute capacity. We're in a world that's severely limited by supply while demand for AI workloads just keeps rising. Another obvious question, will the total AI market grow over the next 5 years? The answer is almost certainly yes. If the market grows and we remain compute constrained, then Nvidia, AMD, Broadcom, Google, and many others can all thrive at the same time. There is no winner-takes-all situation here. Demand is far greater than supply. Let's also revisit the GPU versus custom ASIC explanation, because a lot of confusion comes from that comparison. Think of an Nvidia GPU like a Swiss Army knife, flexible, able to handle a wide range of workloads, even if it isn't the absolute best at one specific task. Now think of a custom ASIC, like Google's TPU, as a scalpel, extremely efficient but designed for specific workloads only. Both tools have real value. Google is a perfect example of this balance. They rely heavily on their own TPUs for internal work, but they also spend billions purchasing Nvidia systems so they can offer versatile compute options to cloud customers. Nvidia's flexibility is its biggest strength. Cloud providers can serve all kinds of customers because Nvidia hardware handles so many workloads. That's why I don't see Google's progress with TPUs or Meta being interested in TPUs as any kind of major threat to Nvidia. The market is huge and still in the early stages of expansion. Now let's address the criticism floating around this week, especially the comparisons to the dot-com era. While there are some similarities, there are also major differences that people tend to overlook. First, the companies leading this AI build-out today, Amazon, Microsoft, Google, are using their own cash flow. They're not unprofitable startups burning investor money hoping something works out. These are extremely profitable giants funding AI infrastructure from actual earnings. Second, these firms have some of the strongest balance sheets in the world. Third, they aren't investing blindly. They already have massive demand from real paying customers. For example, Microsoft reported nearly $400 billion in backlog. Amazon has about $200 billion. These are concrete obligations, real business that needs real compute power. Something Gavin Baker said recently sums up the difference perfectly. During the dot-com bubble, 97% of fiber optic cable was dark, meaning unused. Today, there are no unused GPUs. Literally every single GPU is deployed because the world can't get enough compute. That is not a bubble, that is a supply shortage in front of massive demand. This shortage is also why I disagree with the idea that hyperscalers are understating GPU depreciation just to boost earnings. The more realistic explanation is simple. Nvidia keeps improving older GPUs through software. Demand is so high that customers will use any hardware they can find, even older generations. This extends the useful life of GPUs significantly. That's why 100 GPUs from 6 years ago are still running at full utilization today, and why CoreWeave can rent H100 capacity at 95% of the original rental price. This isn't a bubble. This is unstoppable demand. Now let's talk about what's coming next. One of the biggest long-term drivers will be physical AI, robots, automation, real-world intelligence. Most people don't realize how big this is going to become. Nvidia is perfectly positioned because they provide everything. The hardware for training. Omniverse for simulation and testing. AGX systems for real-time on-device intelligence. Over 2 million developers are already building on Nvidia's robotics and physical AI stack. This is going to explode in 2026 to 2027. Nvidia's roadmap is also very clear. Blackwell Ultra is ramping fast. Rubin in 2026. Rubin CPX late 2026. Rubin Ultra in 2027. Feynman in 2028. Jensen expects $3 to $4 trillion in global AI factory build-out by 2030. This story is far from over. Nvidia still has a long runway ahead, and I believe the company will be worth far more in the coming years. Thanks for watching. Don't forget to like and subscribe.